All right, good morning and welcome back to at 2:30 a.m. Eastern, UK and the Asia session combined. Uh, Kindly excuse me for not being able to make out during these times yesterday. Just uh, just 1 minute before we begin the session, I'm still not feeling absolutely well to continue, but today in this session I plan to discuss three units instruments, that is Bitcoin, Euro USD, and Nifty. And before we begin, as a normal practice, let me just read out the disclaimer. All right, it says, dear traders and investors and brothers and sisters who are watching it live or a recording of this version, please be aware that this channel or the sessions are absolutely for the purpose of education and specifically on the Elliott wave counts, trend lines, Fibonacci ratios, and support resistance. Uh, any potential direction that we might have discussed here should not be considered as a form of solicitation or to trade or invest in either forex, equity, or any other segment. These sessions are specifically for the purpose of spreading awareness and to help take informed decisions if at all you are wanting to trade on your personal accounts. You're humbly requested to look into your personal risk aptitude and also take financial advice if required before putting any of the above discussions to use. Also be aware that trading forex or any other margin instruments that should not be considered as a fixed return on investment. Kindly be aware that trading into such markets can be very risky and you can lose at times more than what you've invested as a margin. If you have any questions or doubts or queries for whatsoever regarding these videos or any other personal question, kindly leave your comments herein and I'll definitely get back to you as soon as possible. Alright, let's get started with the wave counts for Bitcoin. It's been a long time now. Quick enough. I'd like to touch base with all the wave counts since July 2017. We've done all this in the past, so 5 waves completing, giving way to the first leg of one higher degree, followed by a 3-wave corrective drop ABC, which also gotten complete around the just shy of the 55-56 mark. That completes wave 2. Interesting facts, couple of interesting facts. The first one, it has bounced right from the trend line, a support trend line, and the second one was the Fibonacci retracement levels. It was just taken bounce from around the 61.8% retracements. All right, or sorry, not 61 but almost 786. So it's now absolutely clear that we've done five. Please don't forget the basic tenet or basic structure. 5 up and 3 down. Right. Having said that, ideally it should be another sequence of 5 up from here. Now this one looks to have been the first leg of a lower degree. We are not yet completing into brackets 3, but I can plot wave 1 over here, followed by a corrective drop, which also looks to be complete now, making it wave 2. So if the second wave is terminating, or it might terminate a bit low, maybe around the 8,000 mark or 8,000 levels, just watch out for a quick bottom formation in the Bitcoin, in the instrument. I mean, it's a wonderful 5 and again a 3. Now just remains to be seen if that third wave is already terminated, or it might want to push lower towards the 80-100 mark. But once the bottom is formed, watch out for a potential thrust move into the third wave right there. Right. So it's been a while that we discussed. I told you earlier on that Bitcoin needs to be given some time for a correction to get over, or a corrective drop. I think sorry, by most probable means, this could be the structure. Let's get rid of the past work. This could be the next, could be the beginning of the next 5 waves, at least of one smaller degree, just underway right now. Could be wave 1 and then ABC wave 2. If you're looking at to take the Fibonacci retracements, it's already bouncing from the 50 mark right now. Right there. So one should not be surprised if there could be one more push towards the 81.27 levels, but whatever the reason, I think either from these levels or just one Fibonacci level lower, it is very likely that Bitcoin should form a bottom and allow prices to begin rally from that point onwards. As far as the resistances are concerned, please keep a watch on the 12,000 mark, the 15,000 mark, and the 17,000 mark. Right, so that should be the most probable trajectory for Bitcoin. Right, let's move on to the next instrument now, the Euro USD, and then we'll touch base with the Nifty before we wrap up this session. One small announcement, brothers. Starting Monday, these sessions, or this channel is getting converted absolutely educational sessions only. So it would be like a how-to series that I'll start discussing from Monday. These sessions, case studies will be very quickly done. It will be followed by uh, the educational stuff. Let us learn together. Okay, so the trend line which we have been following, which we have been talking about in the euro, has been met with. You see, the backside of the trend line was tested accurately. Now it remains to be seen. I think it is formed a top, or a lower top. I should say. Sorry, it's a lower top because a meaningful top looks to be in place around the 25.55 region right here. And to put the wave counts into perspective view, that could be the first leg lower. Uh, a tiny little ABC can be identified here. It's a very sharp corrective rally, I would say. Now, if this has to be taken as a very sharp corrective rally, and we already have the second wave in place, what it means is euro should be looking to print lower lows and lower highs from this point onwards. That means if I do a protective trend line, like resistance trend line, if I connect these two dots, this is not an actual trend line because we don't have a low. But if we do draw a protective line in sand kind of a scenario, then euro, if this wave count holds to be true, then yes, euro should be looking to push lower, and it is already resuming wave 3. Right, that's the first degree of wave 3, first lower degree. Wave 3 is to be unfolding into 5 waves. So any intraday pullbacks is going to face some resistance, very stiff resistance around the 29.80 or 23.80-90 mark, for the drop to continue lower from there. Alright, this is one scenario that we have discussed. Possibly wave 1 is in place and wave 2 is also in place with a sharp corrective rally ABC. Now if you look at the same view on the daily chart, at least on the daily chart, the corrective rally has not unfolded into 3 waves. I mean, it's not necessary though that it should unfold into 3 waves, and you should be able to make out those waves. But if it wants to, like say that's the first drop, wave 1, and then that could be A, B and C. It could turn out, or it could produce a complex corrective wave structure for the second wave to terminate. And if that is into play, in that case we might see one more low, but ideally it should terminate somewhere below 25.55. So the alternate scenario could be we've got wave 1, and this could be capital A, and the current drop could be capital B, and then there could be a capital C, right up to it would go right up to 2500. capital C, which would be in a way the termination point of wave 2 actually. So that's an alternate case. So keep in uh, your subconscious uh, that if at all there is a rally which extends above the 2450 mark, then that is still keeping the bearish view in intact. All right. And I would rather go a step further and say that okay, even if it prints a new high above 25.55, that then uh, there would be a change in the fourth wave. That I would terminate wave 4 over here of one larger degree, and then wave 5 termination around the 2600 mark. All right. So all in all, Euro USD looks to be still a candidate. If aggressively, if you have been following the past few sessions here with Euro, then, and if you're an aggressive trader, you must be already short. If you're a conservative trader, you might have taken some profits off the desk. But all in all, the strategy in Euro could be watch out for opportunities on the north side to go short. For don't be mistaken, or look out for opportunities to go short on rallies. That's what I'm trying to say. And if the first scenario that we discussed about the second wave already in place is true, then prices would ideally want to stay below the 24.50, 55 region. All right. Okay, so that was Euro USD. Now let's quickly go and discuss the scenario for Nifty. That's what yesterday we didn't meet, but day before yesterday, what we were discussing, there's a potential 5 waves down. Let's continue the story from there. It does take a while for Nifty to come up on the screen here. Just a few more seconds, I think, and we should be there. Now it's taking too much of time. There you are, Nifty chart in front of your screens now. Now, as I said, I won't take much time to discuss the potential outcomes in Nifty here. Immediate support now is seen around the 10,030 mark, right? And as far as the wave counts are concerned, now we can safely plot the fifth wave, which is being terminated right there, that around the 11,200 mark. What has followed, what has actually followed is 5 waves. They are very clear now, very clear wave counts here. 1, 2, straight down there, wave 3, and then absolutely wonderful sideways action I think we followed right through the sideways when we began discussing Nifty again, and already the fifth wave has terminated right here. Now, with that point in termination around the 10,136 mark, you never know. It might push one more time lower towards the 10,030 mark with 100 points here and there. Okay, that doesn't change the scenario, but we are very close to forming the fifth wave. So let's say, or the fifth wave would terminate right there. That would give us the first wave on the downside, or let us label it as A. So it could be the first wave within the 5 waves impulse drop expected lower, or it could be wave A within the corrective ABC drop lower. But bottom line, brothers, watch out for Nifty producing much deeper correction than most of us have, or most of the traders have imagined or visualized. I think just watch out for a much deeper correction in Nifty in the coming days. So the structure indicates 5 waves impulsive move on the downside, right? 1, 2, 3, 4 and 5, and then an ideal scenario would be a corrective rally. Now we are waiting for that corrective rally to materialize. Now it remains to be seen if it's going to happen today or maybe on Monday. Maybe it can drop lower one last time, terminate fifth wave, and then begin the correction. And watch out for the corrective rally. Okay, that's the expected, most expected and the most probable outcome from this point. Is to expect a corrective rally towards the 10,650, 10,800 zone before it hits resistance again, right? But it's not a time to aggressively go and build your longs at this point in time. It's going to be a scenario much like wait for the right price on resistance to strike on the south side, the Nifty. All right. So that's it for now, brothers, in this session. Let's bring it a pause here, and I'll be back again on Monday, that is 12th of March, around these times, 2:30 AM Eastern or 1 PM Indian Standard Time, to continue discussing at least Nifty as the local domestic index, and there are stuff to discuss. I mean, there's Dow Jones, there's EURUSD, there's the dollar index, there's a Bitcoin to be discussed on the international segment. All right. Until then, thank you again for joining. Thank you for being subscribed, and also thank you for helping me spread the word for this channel. All right. So until then, good luck to your trades, and please take care and God bless. Goodbye.